Our next story is about Japan. Last month, the country slipped into recession. Japan fell behind Germany and fell from the 3rd to the 4th spot in the global GDP rankings, meaning Japan is now the 4th largest economy in the world. Germany, which is also on the brink of recession, has taken the 3rd spot. So Japan's economy is shrinking. But Japan's stock markets are soaring. It's quite a contrast. Japan's Nikkei is smashing records. For the first time in its history, the index has crossed the 40,000 mark, 40,000. Their last peak was some 35 years back in 1989. That's when Japan's markets touched a high. Their last all-time high was around 39,000. So it's taken them 35 years to enter a bull run. But why now? What explains this surge when the economy is struggling? Why are the stocks soaring? Well, three things. 1, a rush of foreign investment. 2, better returns for shareholders. And 3, a weak yen. That's the Japanese currency. Let's try to understand this through the example of Toyota, the Japanese car maker. Last month, Toyota became Japan's most valued company. Do you know how much Toyota is worth? More than $300 billion. Its stock is in high demand. So the share price has jumped by 15% this year. And who is buying these Toyota shares? Mostly foreign investors. The company has been posting good numbers. It expects a solid jump in profits, a jump of some 65%. Also, sales have jumped. Toyota is in expansion mode. It is investing in emerging markets and in emerging technologies like electric vehicles. Last year, Japan's currency, the yen, fell. It slipped to a multi-decade low, and a recovery is nowhere in sight. And Toyota has benefited from this because exporting cars has become cheaper. And this is not a unique case. Toyota is not the only company that has benefited. The entire stock market in Japan has made gains. Foreign investors are pouring in big money. In January, they invested $14 billion into Japanese stocks. Japanese companies are reporting strong results. Their earnings rose by 45% in the last 3 months of 2023. Plus, marquee investors are turning to Japan. I'm talking about the likes of Warren Buffett. His company is buying more Japanese stocks. In 2020, he invested around $6 billion in Japan. Today, that number touched $17 billion, from $6 to $17 billion in 4 years. These are large investments, and they look set to continue. And it's not just Japanese companies that want to make the most of it. Japan's Prime Minister is also trying to ride this bull run.
It is encouraging to see the market's positive response to our efforts and the transformation of the Japanese economy. This year is a critical time for this trend to take root. The government is committed to achieving a virtuous cycle that includes structural wage increases.
So the soaring stock markets make for good headlines. But a strong stock market does not necessarily mean a strong economy. And Japan is the best example to understand that. Stock markets run on sentiment, on company results, on profits. And while investors and businesses are getting rich, the people of Japan are not. Inflation has been high and savings are going down. The household savings rate has turned negative in Japan. Factories in the country are also producing fewer goods because people are buying less. 4 days back, Tokyo released the latest numbers. Japan's factory output fell at its fastest pace in nearly 4 years. Japan also has the world's oldest population. This has serious repercussions on the economy. An aging population strains a country's finances. It shrinks the tax base and increases the expenses. At this rate, Japan will spend more on healthcare and pensions. So stocks are going up, the economy is shrinking, the Prime Minister needs to intervene. He has a narrow window of opportunity to reverse Japan's decline and revive its economy. He must act now. Without the right moves, the bull run in the Japanese market will be reduced to just a bubble.